Hello, and welcome to The Responsibility of Investing, the PRI's podcast. Today's program is about financing for development. My name's Nathan Fabian, and I'm the PRI's Chief Sustainable Systems Officer. It's good to be with you again. And I'm joined today by Helena Viñes Fiestas, who is Commissioner of the Spanish Financial Markets Authority and co-chair of the Taskforce on Net Zero Policy. And also Eric Usher. Eric is the head of the UNEP Environment Program Finance Initiative, or UNEP FI. And Eric is also a member of the PRI Board. Now, in a very hot week in Seville, Spain, at the end of July, the fourth International Conference on Financing for Development took place. This was a conference focused on enhancing global financing frameworks to support the Sustainable Development Goals. These frameworks involve not only arrangements between governments or with philanthropies, as had traditionally been the case, but also those for companies and private investors. And it coincides with investors calling for more policy frameworks and better investment conditions in emerging and developing economies. And of course, it's also occurring at the same time that funds from donor countries to these emerging and developing economies has reduced. And this has strengthened the argument for a need for an enabling environment for private finance. And so it's become central to the financing for development agenda. Now, today we're going to discuss one particular aspect of this agenda, which was captured in something called the Seville Commitment from this conference. And it's called Paragraph 34, and we're going to discuss its implication for investors. Eric, can I come to you first, please? Can you tell us a little bit about what this paragraph 34 is all about and its significance for investors?
Sure. Well, thanks very much, Nathan, and a pleasure to be with you and Helena today. This is an interesting development. The Financing for Development agenda, it's a multilateral process where countries come together essentially to discuss how to make progress on some of the big challenges around how do we mobilize financing for development in the developing world. And historically, it's focused on areas like over-indebtedness of countries, tax avoidance, illicit financial flows. So a lot of the good governance aspects from a macro perspective of what governments need to do and where assistance can best be directed. And obviously, central actors here are the international financial institutions, the multilateral development banks, World Bank, and others. What's new in Sevilla, captured in the Compromiso de Sevilla, is this paragraph, which for the first time we start to see how good functioning of the financial markets and types of topics that the PRI and others have been working on for years now starts to be embedded. And so we're seeing a coming together of agendas. And as you've mentioned, if we're going to see many aspects of development within emerging markets and developing economies, we are going to have to see the private sector playing a larger role over time. And to do that, we're also going to have to see the type of transparency and good market functioning of the type of topics that we're all quite interested in. So I think we saw good progress there for the first time. We have a multilateral agreement that captures some of these topics around transparency, disclosures, taxonomies, which we can talk about more.
Yeah, thanks, Eric. So, I mean, this is interesting. It's a UN framework agreement. And there's this focus, as you said, on enabling environment for the private sector. But haven't we got other institutions that deal with these types of policies and settings for private sector? Like we've got the G20, we've even got the International Platform on Sustainable Finance now. So why is this significant for our listeners?
I think two reasons. First of all, we have to acknowledge that where progress has been made, probably emerging markets or developing countries, particularly, at very early stages on these types of issues around good market functioning. So I think it's good that this becomes a point of progress within those processes. And the other one is geopolitically the reality today that certain processes I think we can expect are going to be quite challenged in the years to come because geopolitics is difficult today. And so interestingly, this process moved forward and didn't see, I would say, the type of headwinds that we were seeing maybe in other processes today.
So that's an interesting point to pick up, actually. This conference seems to come at a moment when there was appetite for uh, advancing the enabling framework. And it's maybe a good moment to bring Helena in, thinking about the task force on net zero policy. What did that latest task force work tell us about the appetite on policy around the world for enabling private finance?
Thank you, Nathan, for the question and for inviting me. It's a real pleasure to be with you and Eric, and to be able to discuss the results of or the findings of the task force report and work over the past year, but also of the latest developments. I think the main message of the task force report is that over the last 10 years, now that we're about to celebrate the 10th anniversary of the Paris Agreement, we've seen incredible development when it comes to policies that are designed to support, you know, uh, large companies and financial institutions in their efforts to transition to net zero, but also to a much more resilient and sustainable from an environmental and social perspective business models. Um, Very interesting. What we've seen is that that development has happened in advance as well as in emerging and developing markets, but also that over the last year, despite the backlash in the US and despite the, let's call it recalibration in the EU, because it's still hard to fully assess what's happening right now in the EU, that policy development in this area has continued elsewhere in the world. The world has continued to turn. And really interesting, 3/4 of all the policies adopted last year was outside of North America and Europe. So really what we're experiencing, it's sort of like a shift towards the south and east when it comes to the momentum in this area, very much around the Asia Pacific area. So I think that is an incredible, very powerful message to investors, but also policymakers that might be in in Europe and in the US, rethinking some of the policies. Because what we're seeing is that, look, whether you impose them or not impose them, or you develop them and you have a hand on them, the transition plans, things like transition plans, taxonomies, disclosures, any large company or financial institution that wants to operate internationally will have to move towards that. And this is the power what is happening in the world. And I think that for us, like the Finance for Development, yeah, or the COP that we just came back from in Brazil, you know, uh, creating those spaces for policymakers and governments that are engaged to continue to discuss the development of those tools for private actors. It's incredibly powerful, yeah? And it's not only that somehow they help shelter them from political shifts, but also that they work together towards convergence. So I think that we cannot underestimate the power of paragraph 34.
Yeah, that's interesting. So there's a strong message for Europe there, even though there's been implementation challenges. The fundamental ideas are being adopted globally now in terms of how we work in financial markets sustainably. So that's quite an important message, I think. And the hopes of, say, middle income countries or economies that are still developing on sustainable finance seem quite high, which is interesting. It also comes with a realization that they were well behind on the sustainable development goals. So, Eric, is it realistic that all of this work on enabling environment that's captured in paragraph 34 and this wave of policy reform around the world, is it going to help with catching up on the sustainable development goals? Has something changed in the world out there to make this a more realistic proposition now? What are your thoughts?
I mean, of course, we have to acknowledge the world is a very complicated place today, and governance communities are faced with many types of challenges. Um, However, I think there are a couple of reasons why we can be optimistic. I think Helena mentioned a few of them. We are seeing market transformation, the energy transition, for instance, really taking hold, and regions like Europe have done a lot over the years, but a lot of the energy today is coming south and eastward, and the numbers coming out of China, but not only China, India, Pakistan, Vietnam, in terms of the transition, the scaling up of markets is really quite impressive. And so I think what this paragraph looks at is essentially wider market functioning. So it's not only the green assets, but it's the greening of assets. Essentially, how come all parts of the economy, including hard to abate sectors, steel, cement, agriculture, how can they start to make the shift? And we see some positive numbers, but we also see the need for a full economy approach. And of course, that combines enabling environments, so policies, getting the incentives lined up, but also the institutional governance that's required for market functioning. So I think it's a little bit, how do you take, maybe you call them green shoots, or areas where action is starting to happen, and broad base that across the economy. And emerging markets today, they're in a different environment in terms of trade, in terms of a changing environment. The economy, the impact of a changing climate hits hardest on populations who are least prepared. And so I think there's a whole raft of issues, and you can make progress in individual areas with technology and business innovation. But if you really want to scale up the engagement of the whole economy, you need functioning markets and the type of transparency that topics addressed in this paragraph point towards.
Yeah, so that's interesting. So you point to a bit of an imperative, really, and also some opportunity. And these things are coming at the same time. I guess the withdrawal of some aid budgets has maybe switched some of the thinking, but also what I really am struck by in your comment is the way you describe thinking about markets. And so participating in global capital markets in a more direct way, even though it's of course challenging for some emerging economies, seems to be the objective here. And so this is why I guess you're saying there's enthusiasm for these reforms in paragraph 34. So maybe we should just support the audience by saying what's in paragraph 34. So either of you, please just tell us some of the policies, some of the things that were in there when the statement was released.
So I think for me, one of the really interesting things about paragraph 34 is that it actually points to a whole set of standards and regulations, right? So it goes from taxonomies to the specific disclosures. So really looking at the wide range of policies that we have, for example, at the Taskforce, we have looked at from a corporate and sustainable finance perspective. I don't know if, Eric, you want to add to that. And obviously, it doesn't only touch upon climate mitigation and adaptation and the different environmental objectives, but also social aspects as important, as all the entire spectrum of the Sustainable Development Goals.
Yeah, no, I won't add to that, Helena, because I think you've covered it. And it's really about, the belief that markets function better with information that allows them to assess risks and the opportunities. And essentially that's what's at the center of what's proposed. Now, of course, a paragraph is just wording on a text. The real question is what governments and others do with it. But I think because there's a long history, of course, of governments working through the international financial institutions, World Bank and others, on a range of development priorities, I think putting this at the center of their objectives is very important. Often the role of the private sector and working with and through the private sector sometimes gets left off the objectives in the rush to get things built on the ground. In terms of critical health infrastructure, we can understand that, there's a need to get infrastructure in place. And in certain markets, or in certain countries, they don't have functioning financial markets. And so there's a drive to just build the stuff through public means. But I think here it's more about, well, where do you get the handoff over time? Where do you bring the private sector alongside so that increasingly they can start to take the lead?
Yeah, I just wanted to add very quickly that from my perspective, the real power of paragraph 34, it's the political commitment, right? For, as you mentioned it before, we have the International Platform on Sustainable Finance, the G20 Sustainable Finance Working Group, and many others. But it is that political engagement that really is aiming towards, convergence of financial interest with societal interest. And I think that's the power of it. We've seen with the Paris Agreement how powerful that is in terms of sending the right signals to private actors, to companies and investors alike. So we cannot underestimate, even if sometimes we can get frustrated in some of these forums, like at COP30, that we would like them to go faster. We cannot underestimate the power of multilateralism, particularly today in the current geopolitical context.
Well, so that's a really interesting thing to bring in, actually, because to me, at least at COP30, it seemed like the development finance institutions and the development banks have stepped up a level on their engagement. So I was seeing echoes of the enthusiasm that Eric describes around DFI response, backed by political impetus, on display at COP. Could either of you share some of the things you picked up?
I mean, I think, these topics, the fact that they are so centrally positioned now within these processes. We've just got the completion also of the G20 in South Africa this past weekend. And once again, we see a lot of these topics at the forefront, including climate and a lot of issues around the effect of a changing climate on countries, particularly in Africa. This is the first summit to have taken place in Africa. And so we see a coming together of agendas where I think climate used to be kind of at the periphery of the role of the mandate of the development banks. It's become very central because the realization is that unless you solve climate, you can't solve development. It's not one trading off against the other. It's they're wholly entwined. And once again, I think this is why this paragraph sort of shows how you address it. Is you can't only do it through public treasuries. You really need to get the financial markets engaged on these issues. And for that, you need the basics of good functioning financial markets, which is what's embedded in that paragraph.
Referring to the other side, I think the role of the development financial institution has been crucial and incredibly positive. I think that what we're not seeing is the rest of the market actually investing in, in these markets as they should. And if I may, Nathan, I might quote David Atkin, the CEO of PRI, who made a great intervention in Sao Paulo, where he highlighted, look, the cost of renewables have never been lower. They have been displaying all across the world, except for in some of the developing countries. When we look at the African country, we see the 70%, that it has 70% of the world's capacity for solar and wind energy, but only receive, and I think he said 2%. Yeah, please don't quote me on that one, but really low, right? So that means that despite all the efforts, there are other issues that they are structural issues when it comes to investing in those regions that need to be addressed. And I think that that is what we now need to focus. How can development finance support the investment of pension funds, of, asset managers across the world, how they can help to de-risk and act whether or not those risks are perceived or real.
Okay, so thank you. That's a good point. And if we're picking up the theme from both of you on the enabling environment piece, we're noting the good DFI and development bank work, but we've both gone back to the point about enabling environment and encouraging the attractiveness for long-term savings to be allocated from developed economies. But let's just think for a moment. It's not so hard to argue on the infrastructure side, where there's nice big lumpy assets and you might have a support from a public institution. But didn't we learn in Europe that if you're trying to implement things like disclosures and taxonomies and transition plans and all of these things, aren't you just putting burden on the industry that needs to develop? So how does this work for, say, small to medium enterprises and emerging economies, which isn't this just adding cost? Some people will be asking. What are your thoughts on that?
I mean, I would go to Asia. Some of the really dynamic things we're seeing happening, and I would also capture, economies like Japan, Korea, Singapore, where governments are not sitting back. They are engaged in helping, realize these transformations. And I would say in many ways, you see a more holistic approach to how, and you start with the Chinese model of, engaged capitalism or whatever term you want to use. It has many features that actually provide confidence to the private sector in terms of the sectoral transition plans, the direction to say this is the way the different sectors need to be moving. And the Japanese have been out front and, issuing industrial transition planning information that the private sector can invest behind. So I do believe that there's a coming together. The Asian way is different, I think, than the Europeans. Maybe there's somewhat more use of incentives, so a little bit more carrot than stick in some ways. And I think there's good learning to be done there. But I do see, we see increasing examples of the markets that are scaling up are those who are not just sitting back and waiting for it to happen, but there is very concerted engagement from policymakers to help make that happen. And once again, I think these, having proper transparency, so disclosures, so that investors know where they can put their capital and know that the companies have transition plans or equivalent to that allows them to assess, are these going to be leaders and beneficiaries of the transition? Or are they laggards and going to increasingly be a risk to a portfolio?
And if I may, Nathan, add to that, I fully agree with Eric. I think that maybe in Europe, the carrot has not been developed as much as the stick, right? But if you also allow me, I think in Europe we don't appreciate the incredible, effort that has been made and how bold the commission at the time was. And I think that we need to be very proud of what has been achieved and at the same time very humble about all the errors that were made. Yeah. And I think the rest of the world can learn from the mistakes, yeah, and the successes. And for me, one of the mistakes, and obviously knowing that the time gives you a level of wisdom, that is hard to have at the time of developing, is that the whole package should have been done much more closely in dialogue with the industry and the entire value chain of the industry. So with small and medium enterprises, with large enterprises, with enterprises from all the different sectors. So that I would say that's one. Secondly, from the very beginning, we should have developed more closely tools to support large companies, but very specifically small companies. Some of the work that is being done now on standards, adapted to small, medium enterprises, to, like a sort of like a taxonomy adapted for small and medium enterprises. That should have been thought from the very beginning. Also, capacity building. We underestimate how revolutionary all these policies are. This is the first time in history that been placed. So, of course, we need to also, build capacity, teach, and educate players across the spectrum, and I include supervisors. Yeah, I can see in the supervisors also struggling to catch up with the developments. And last but not least, now that we have a little bit of experience, we need to review based on evidence and hand in hand with the industry. I think that would be some of the key lessons, besides some technical, a long list of technical learnings, yeah, that I will, share with my colleagues all around the world.
Mm. Thank you. So, one of the interesting data points I think that helps ground the level of take up is the number of taxonomies that are being developed. Uh, there's a new number every day, but I think we're saying
Yeah.
at least 50 now, and maybe even more, that are being implemented. And that does appear to be an example of uh, different jurisdictions trying to send the right signal to the global capital markets to say we are going to have some standards, we're going to have some transparency on what our environmental and social performance is, and that you can expect some accountability to those. But isn't there a bit of a risk that everybody goes their own way and that countries try and stand out? What are we learning about how all of these countries trying to reform at the same time with their own priorities in terms of, we're using this word interoperability quite a bit. And I know there's been some work done recently on taxonomy interoperability. Is this a realistic proposition that countries can actually coordinate when they're all trying to stick their head up and say, yes, I'm doing my thing and I'm trying to say I'm ready for business as well? Can this work for global capital, or is it going to be a bit of a mess? Eric, what do you think?
I don't think we have a choice. I think it's clear as they become more central. You need interoperable technology. First of all, you need to acknowledge that every economy is different, and economies do need the ability to define what is sustainable in a way that's relevant to their economy. I'm Canadian. There are some very particularities around, particularly around the energy sector, as you would know well. We've just come from Brazil, and if we think of land use, deforestation, so there are some specificities. So I don't think the idea of a global taxonomy makes sense. But at the same time, particularly for investors and global companies, having 50 or 100 different frameworks, that's part of the reason why the EU exists, because of the benefit of actually coming together and standardizing approaches. So I think progress is being made. And we're very pleased to be working together with the PRI and others on coming up with a set of tools and efforts around promoting taxonomy interoperability. I think we do have to acknowledge that, Europe and China were the starting points for taxonomy development. And around the same time, both of them were working on it, and both of them have learned a lot over essentially the decades since. And as Helena says, I think you have to have the right feedback loops that integrates into increasingly progressing. But a lot has happened, and I would come back to my country, Canada. Frankly, they've been pretty slow in taxonomy development. In the recent budget, they did once again give a new impetus to get the taxonomy developed in Canada. But frankly, it's been many years that there has been much progress, and we look at the energy transition or other aspects in Canada, and that's been pretty slow as well. And so they obviously, there's an interlinkage between the two. And I would call out the Brazilians in a positive way in launching their taxonomy in Sao Paulo just before the COP. And I think there were a lot of investors who were very enthusiastic, and the Brazilians also, in terms of as a means to mobilize investment into these transitions, to bring global capital markets to Brazil. The taxonomy is one of the tools to do that, but it has to be done in a way that those investors understand what they're coming towards.
Yeah, it's a very interesting example. And Helena, I'll come to you in a sec. But if I could just say, the thing that struck me was both in Brazil, but in some other countries, the ease with which policymakers will talk about their sustainable development objectives, both social and environmental, and the role of taxonomies in getting some alignment between policy settings and investment. It's not a contested idea. That seems to be a very fundamental part of policy thinking and financial market development thinking, that these two things have to go together. Maybe it's when you've got such a clear development context that is the case. But Helena, obviously you've been in Brazil as well. What were some of your reactions on what you were saying?
I was extraordinarily pleased to see how Brazil has really taken a leadership on the roadmap of the taxonomy initiative, and how they have embraced the principle and promoted the principles of taxonomy interoperability, acknowledging what Eric just said, that we need to strike the right balance between giving jurisdictions and expecting jurisdictions to develop policies and tools that they are fitted for the purposes, their economies, but also their their environmental goals and social goals, and at the same time start converging or creating a common international common framework, right? That allows for the differences between different jurisdictions, but at the same time, we have some common principles and some common tools. And what we've seen, one of the lessons of the Taskforce work last year, that you both know, because you've been, very much part of it, is that the diversity of tools and approaches across the world. It's more than a barrier, it's an opportunity for exactly doing what the Brazilians did at COP, which is let's sit down all together around the table, share the experience, the learnings, and help each other to progress. You said it. Europe was, together with China, the first ones to develop the taxonomy. And I think, they should get the credit for that. But hello, we're now in Europe looking at what the Australians and Brazilians have done on mining, for example, looking at, Rwanda on adaptation. So really learning from the rest of the world how much more we can get done, and progress if we create those spaces, and there is a political will for exchanging and learning.
Okay, so you both give a pretty positive story on the outlook, but let's just sort of put this paragraph 34 back in at the front of our thinking for a moment. And isn't there a risk that for a lot of economies that wanted to adopt and support this paragraph on these reforms, when there's a high reliance on capital markets, which ultimately investors have duties, banks have duties, insurers have duties, and they need to earn a return? Is there a risk of some false hope here? What's the end game looking like for all these countries that have hopes on these areas?
Let me turn that around, Nathan. We've come through a very particular couple of years, 2021, 22, where I think we all have to acknowledge that there was a particular hype in the market around sustainable assets. And maybe that hype helped drive a fair amount of action, but we also have to admit that I think it's led to some confusion. Definitely, there was greenwashing. There has been greenwashing. And therefore, a big part of the action from governments has been how to tone down incidents of greenwashing. And therefore, some legislation, and once again, including in Canada, has really been directed at countering greenwashing. But I think we all have to see the opportunity of the current moment is the time for greenwashing is largely past. Nobody's saying much. What's happening within organizations hasn't maybe changed that much, but what they're talking about, they're very, very careful about anything they say. And so it then means that the main reason for these actions isn't about reducing greenwashing. It's about getting a clearer understanding of where the value lies. Essentially, what is the business case for these transitions? So I think it allows, and taxonomies are important for that, to identify, to understand essentially what are the risks that we're dealing with that can create an impact on assets, that can devalue in different ways, and where do we see the new types of opportunities. So I do believe that we're moving into a new period where you look at the underlying, and including if you look at the public markets, equities particularly, you have this herd instinct of all the capital running in and then capital coming out, and a lot of actors monitoring that and making a big narrative around it. But then if you look at the underlying, including like in the fixed income markets or in sustainable debt issuance, there actually hasn't been a slowing down. And as we know, in the energy transitions in many markets, it's continuing. Even in the United States, investments in renewables are continuing at pace. So I do believe that we've moved on to a new phase, and the phase really is about sustainable business value, understanding where the risks lie, what this means for portfolio management, and what this means for opening up new opportunities to help drive the transition. And once again, you need the appropriate level of transparency and disclosure to do that, not to promote greenwashing and overhyping, but actually to promote the transparency you need for investment to happen.
Thanks, Eric. Helena?
Yes. Just to complement what Eric has said, I think there are three short observations from my side. The first one is that one of the key learnings over the past years is that no one tool, no one type of policies are enough sufficient, that we need a system-wide approach, right? That we have financial regulation, corporate regulation, but at the same time, real economy regulation and policies that complement. And actually, they're consistent. When we look in really to the details, we see inconsistencies within different jurisdictions. Climate change is a perfect example where on one hand you see all those policies that we've been talking about, and at the same time governments continue to subsidize fossil fuels. So that would be the first one. The second one is that also that we address in the report, in the Taskforce on Net Zero COP30 report, we're moving now to the implementation, and accountability enforcement becomes really important. Yeah, one thing is to have the right policies. The other one is that those policies are actually effective on the ground. So really important to move towards that. And the last point I would make is that also an outcome of, I would say, the last 2 years of work of the task force is that the two areas where we've seen less development in terms of policies have been, interesting enough, on corporate climate lobbying transparency and on the phasing out of fossil fuels policies. Yeah. So two sides of the same coin. And I know now we're talking about broader than climate change, but equally, we can see that there is a resistance in part of the political world, in part of the society and the economic world, resistance to the transformation that we are experiencing in society. And we cannot underestimate, how much of a challenge that is because precisely of, the lobbying and the access to policymakers. So we really need to progress in that area. One of, for me, the biggest voices during the COP was that of US senators that were present, and at the same time of California and some of the US states. And the number one, for me, message that they were spreading was, look, the fossil fuel lobby is not only a challenge, a real barrier to progress on the fight on climate change, but it is a real menace to democracy. So I think that for me, the biggest challenge is political.
Thanks, Helena. All right. That's a solid message and a big challenge for us to bear in mind as we work on this policy implementation. So as we start to wrap up the conversation, I was just thinking friends of or support for paragraph 34 becomes quite a big issue. And I know for PRI's part, we're adding policy work in countries that have very large environmental and social footprints and economies, whereas in the past we just would have focused on the big financial centers as part of our work. But now we're picking up work in India, we're picking up work in Mexico and Brazil and other countries as well, because we recognize how critical they are to a sustainable financial system globally and having some chance of addressing those global sustainability goals, which are going to affect future returns across economies. So there's some of the things we're doing. We're going to try and support the efforts of paragraph 34 through our work. But can I call on both of you from the perspective of UNEP FI and perhaps from the Taskforce? What do you think your roles as supporters of the intent of this paragraph could be able to contribute?
I mean, why focus on these markets? Because they're the future. I mean, that's clear. And I think that's for many reasons, economically, socially, and also, environmentally, that, we know that most of the new emissions are going to come from emerging markets. And so we need to work with them to help ensure that they can get onto cleaner technology transitions. And so I think it's very important for the PRI to be focusing and increasing efforts in these markets. UNEP FI, most of our work is with the banking industry and insurance, and 90% of finance within developing economies goes through a bank. And so I think the relationship between responsible investors and responsible banking is very important to say, how do we get clarity, including in terms of the information that's required? How do we measure development? How do we operate in environments which are not fully developed, but are developing? What does it mean, and how do you How do you work with your policies and procedures to understand, what is sustainable? And this is why taxonomies are so important. So I think there's a lot of institution change that are needed within investors, within banks, insurers, and others to be playing the largest role possible in helping these economies' development. So really looking forward to seeing progress. I think we see that many of the transitions are happening at scale in these markets, but not all. And particularly, we haven't really talked about the plight of least developed countries, the poorest, where particularly the financial markets, you have no depth. They're very, very difficult to make progress. And I think it then increasingly calls on the question of international actors, what can be done to help in those markets as well.
Yeah. Thanks, Eric. Helena?
Yes, for me, two actually, big lessons in Europe. It was one that the whole sustainable finance package, it didn't take sufficiently into account the realities, for example, of Eastern Europe on one hand and small medium enterprises on the other. Yeah. So the lessons for me is when we are now looking really at the expansion or the development of some of these policies in other parts of the world, we really need to adjust them, and through the lenses of their realities. I think that is one of the biggest ones. I think that from a task force perspective, it is precisely we will continue to work not only to examine the policies and trying to identify best practices and learnings from different jurisdictions, but also create that space for learning and sharing of policies from all around the world.
Yeah, thanks, Helena. All right, we really appreciate, I'm sure the audience appreciates your insights on this reform, which may have been missed by investors, I think, but it really is an example of how so many economies are trying to be part of this sustainable finance reform wave, really, in committing to and supporting these types of policies in paragraph 34. Now, we always finish our podcast with a question for all guests, no matter what their perspective or what they've spoken about. So you're invited to say anything you like to this. And Eric, I'll come to you first. And the question is, what do you see as the responsibility of investing today?
I think the responsibility of investing is understanding the risk landscape, including the risk horizon. And, we have the continued discussion between single and double materiality, which I don't really like the terminology so much. I prefer the dynamic materiality concept, which is a responsible investor is one who manages today's risks, but also has an eye on what is coming and understanding, how the risk landscape can shift quite radically. And so myself coming from the UN, what we do is always based on the science. And we would say the science provides an investor the best compass to be predictive in understanding how that risk landscape is going to be evolving over time.
Yeah, great. Thank you. Very good. Helena?
I will answer from, you allow me, from a retail investor perspective. I think that the same way as citizens, we have a responsibility to vote and to really inform ourselves to cast the best votes for the future of our countries. As citizens, through our savings, through our pensions, we can actually now, thanks to all these policies, align with our values, and for a better future. So as a citizen, we also have to inform ourselves and make the best investment decisions.
Yeah, thank you, Helena. Well, can I just say it's been a privilege to have the both of you on the show today to talk about this quite important development and to share your insights. We thank you very much, Eric, Helena. Thanks for joining the PRI podcast. And to all our listeners, we'll see you next time. Goodbye.